Welcome to my accounting screencast. In this presentation, we will be looking at analysing accounts receivable. But what are accounts receivable? Accounts receivable are recorded when a customer owes a company money for a product or service that has already been purchased. In other words, the receivable is a company's claim on the assets of another business or customer. So how does a business go about managing their accounts receivable? There are three ratios that use company information to determine how well the accounts are managed. The first is the receivables turnover ratio. This is used to see the amount of times a business generates and collects their accounts receivable during a financial period. It is calculated by dividing the credit sales by the average receivables for the period. Next, there is the days in receivables ratio, which allows the business to determine the number of days it takes to generate and collect its accounts receivable. The formula for this ratio is 365 divided by the receivables turnover ratio. Then there is the allowance ratio, which determines a percentage of receivables that are expected to be uncollectible in future. This is calculated by taking the company's allowance for doubtful debts and dividing it by its gross receivables. Let's look at an example. This fictional company, Jiggy Board Games, distributes puzzle games to retailers whose fees are placed on credit. For Jiggies, their credit sales are $60,000, beginning receivables $2,000, ending receivables $4,000, and allowance for doubtful debts $1,200. To achieve the receivables turnover ratio, we have 60,000 divided by 3,000 equaling 20 times that the business turns over its receivables during the financial period. For the days in receivables ratio, this equates to approximately 18 days that it takes to receive money from selling their product to a customer. Lastly, their allowance ratio is 1,200 divided by 6,000, which equals only 0.2% of accounts receivable are expected to be uncollected in future. I hope you enjoyed this presentation on analysing accounts receivable. Thanks for watching.